Sorry?
Hey, welcome to the live show. Mick Holly.
Hey, there you are.
Show. You ready, Andre?
Yeah, Mick, I thought I'd have like this sort of dark background, which sort of illuminates my features and all those good things.
So your face has come out really well. I've got to apologize to the audience. I'm not in my regular studio this week, and I've tried to get the best lighting that I can, and it's a little bit dark in here, but we'll press on. I'm not the most handsome of people, so perhaps that's a good thing.
I make up. Don't worry, Mick. I make up for that. That's not a problem.
Oh yeah, I tell you what, we need our own comedy show. I tell you. All right, so what are we talking about this week, Andre?
Hey, Mick, we're talking about really, it's and I mean, it's very interesting. Like you said to me, Mick, when we try to describe the sort of, let's call it the headline of the show, and you said, look, I don't want to use the words investor ready, okay? And because really nobody knows what that means. And secondly, even if they do know what that means, there's some kind of negative connotation to it, because the last thing I ever want to do is talk to my people about being, investor ready, because what do you think they're going to think from there? I'm wanting to sell my business, basically. That would be the
right. So we're going to introduce a term for you today on the show. You perhaps haven't heard it from us before. You may have seen some of our material on it, but we headline the show with how to kind of maximize the value of your business, and we're going to give you some thoughts around that. And one of the concepts that Andre and I practice when we're working with commercial flooring companies is how to be investor ready. So we're gonna talk about that term, bring it into light, and it's really a way just to think about. It's a mindset about how you think about your business, how you drive your culture and your behavior. So that's the investor ready. That's the investor ready part. And I wanted to share with you. There's a difference between. I think there are lifestyle businesses and there are investor ready businesses, and one's not any better than the other. It just depends on what you, the owner, want to accomplish within your business. If you go to Wikipedia and actually find lifestyle business, you'll find a definition that says it's designed to support a particular lifestyle. It generally generates a predictable income, and it's different and distinct from an investor-ready business. An investor-ready business is about how we maximize our value and how we grow. And I've got a couple of little little examples of the difference between a lifestyle and an investor-ready business, and then I'll invite Andre to talk a little bit about what is investor readiness. So the difference between a lifestyle business and investor ready. So a lifestyle business is we're getting income for the founders. We build a business, we've got into a good place. It's kind of more of a milking kind of strategy. Very successful.
Yeah, we could also be, Mick, just talking about milking. I mean, and milking could also be connotated a little bit negatively, but really, the philosophy. I mean, really, and this is a gray line, because primarily the most of us, well, in fact, we don't have one public company that's in this industry yet. I mean, I know there's been some attempts, but not yet. So, everybody, not the majority, we are privately held, and really, at the end of the day, privately held means that the business is controlled by a small nucleus of people, and normally philosophically they have really these two approaches, and there's nothing wrong with having a lifestyle business. Doesn't mean it's negative. You know what I mean? It means it could be. We've seen some really good lifestyle businesses. So it's just, but you can see the difference between a lifestyle business and an investor-ready business. And those lifestyle businesses primarily are there to ensure that everything else lives of the business. You know what I mean? So to them, cash and profit are absolutely the most important. As opposed to, and he has this sort of slight difference, and once again, that mindset, slight difference. Whereas in an investor-ready, a good investor-ready business, cash and profit absolutely are important, no doubt about it. However, investment is equally important. So the third component of the investment side, you see there's the distinction. Lifestyle people very, very seldom will put investment in front of cash and profit.
Yeah, so in this element there, in a lifestyle business, often funded with their own personal assets or bank debt, an investor-ready business can go out and get other sources of capital to help scale their business. This first thing here, investor-ready businesses, generally trying to scale their operation. They're looking for scalable growth, which is where their revenues grow faster than their costs, in other words, and getting better as a business. But that point there about access to outside capital, investing in the business, very much a feature of investor-ready businesses, Andre. I agree with that.
Right. And so and really, I think this is sort of helpful. Everybody can read, so I think it's. But there are some nice ways of just sort of looking at really where your orientation is, where your mindset is as a business owner. Right. So this is more of an ownership, philosophy. Basically.
And speaking of ownership, Andre, this in the lifestyle business, right? It revolves around the owner. It is, it's a very healthy business. The owner needs to be there. In an investor-ready business, if you were thinking about if an investor came in to buy my business, it would be investor-ready. I want to maximize the value I get from that business. When somebody comes to buy a business, they're not buying an individual. They're buying a system. They're buying an organization. They're buying a predictable stream of revenue and cash flow. So in an investor-ready business, you'll start to see patterns where the owners don't need to be there all of the time. They have some level of distributed leadership.
Right. And the biggest indicator, if you really want to get into this a little bit, the biggest indicator between the difference is, you'll know when an owner talks about people spending my money. You are in a lifestyle business, boy. Because it's not about the business. You know what I mean? It's my money. You're spending my money. You're taking away from me. And an investor-ready business looks at it slightly differently. They talk more about how do we get a return on this? How does this make us, develop a core capability? How does this make us, get to this type of growth and goals that we're looking for in the future.
Right.
So that's and usually when you hear the word my money, it's lifestyle.
Right. Take home cash a priority.
There you are.
All right, that was a little fun. The lifestyle versus investor ready. I just put a few little differences there. Again, both business styles and philosophies are equally appropriate. It's so totally up to you. They just have certain different aspects. And what we're going to be talking about today is what is an investor-ready business and how do you maximize the value of the business. So let's start with that, Andre. In terms of an investor-ready business, what's your thinking for our audience here? And if anyone has any questions, please post them in the comments, and we'll address them as we go through.
So the thing is here, Mick. First of all, with investor-ready, number one, as we said, it is a mindset, but it's also a foundation, right? It's a foundation in my mind. What I love about being investor ready is, and true commitment to being investor ready. It is a foundation for, always getting better. Mm-hmm. That, so that, really the first thing that we think about when we think about our business is we're always getting better. And two things is when we talk about investor ready, it is a philosophical way of of how we govern our business that, it's always at peak performance. So, you can use or interchange the word investor ready to peak performance. And it's very aspirational because investor ready is something that never ultimately gets attained. I mean, you always can put your business into a better place to make it more, let's call it, valuable. And
Right.
and isn't it very aspirational if we are part of a business that everybody wants? Everybody, not only do they want my business, but people want to work in here. People, want to create value. People are endeared towards the the mission of what this business is all about. You know what I mean? They don't feel, okay, I'm just working for the owner, basically.
Right, and you made a great point there. This ambition to improve. I think when you strive for growth, you do need to think differently. You do need to try and get better, because if you grow, without getting better, the place just becomes madness and mayhem. And yeah, you've got more work and more revenue, but you're working so much harder, and it becomes
it becomes crazy. You know what I mean? So and you often see this, Mick, that where people try and grow, but they don't have an investor ready mindset, right? So they're not prepared for it. They think they are, but they're not. And at the end of the day, key people within the organization just say, this is all just too hard. It's not worth it. And the result is that they never really attain what I call sustainable growth. You think about it, how do we attain? Now, sustainable growth doesn't mean I grow 20% every year. It could mean, 1 year I have a leapfrog growth, and the next year I stabilize, and then we have a leapfrog. And, so it could be stepped growth, but it's sustainable. It's your organization is prepared for it, and if you're not prepared to talk about growth, you are a lifestyle business. If people aren't talking about growth, automatically they are in a lifestyle business. And so and I think that's really the big difference. Now,
and Andre, just to interrupt there, because we were having a conversation with an owner the other day, which was around, we've achieved a lot of success. We're very happy with the business as it is today. It's grown significantly. But what we're finding is that the more we grow, we're not able to leverage that. And so we're thinking maybe we'd be happy at this level, and that's the distinction of it kind of tips into being a lifestyle. But in order to get that extra growth, we've got to scale, we've got to get standardization, we've got to do some things differently. We've got to be thinking more investor ready. That is quite a pivotal point for a lot of organizations, and a lot of people are thinking about that today.
Right. And of course, when it comes to succession planning, Mick, if you are lifestyle, the way you do succession planning is very different to the way if you're driving an investor ready business, right? And look, there is a small benefit at the end of the day. An investor ready business will always be more valuable than a lifestyle business. And we will talk about some indicators that drive true value. That unfortunately is the reality. So if you're in a lifestyle business, you can take out a lot of cash, a lot of of your realized profit in cash. You can take it out of your business and invest it in what people want to normally. This is the thing that absolutely, I get fascinated by this. Is people say to me, I want to try and get as much as I can so I can invest in real estate, or invest in the stock market, or invest in something else. They talk about investment, but you know what? The business investment is like on the last of the list. They don't get excited about it, but yet you look at the return on their capital employed in their business, and some of these businesses are getting 25, 30% return on capital employed, and yet they want to go and invest in a piece of property that's going to give them 5. So I'm saying to myself, what are you thinking, mate? You know, wake up. I mean, you know, anyway. So that's
well, yeah, I understand some of that. You know, not having all your eggs in one basket, because and it's hard, you know, operating these, you know, businesses consistently. So, but yeah, you and I, you know, we like to look at businesses in terms of the value creation element. You know, how you're building a long-term asset. That return on capital, very, very important. And if you've got a good business, you know, that's where you need to be. That's where you need to be investing for sure. All right. So I know you've got some ideas on how to help owners maximize the value in their business, Andre. I know you've got a genius formula for us. You never let us down with.
I have a formula.
Saying the other day, we're flooring by the numbers, and you're the numbers genius. So
we've got to have it. There always seems to be some kind of formula that we've got to use. And look, Mick, this is something that, I mean, was, you know, oh man, when we were still in Australia and many years ago, and I mean, like, seriously, I mean, you can look how old I am, many years ago, and you know, there was this sort of this time frame. I mean, it was even before, you know, it was during the 1980s, 90s, somewhere around there. And, you know, there was this buzz in Australia, which is like, a buzz in Australia means that it's small, you know, of these investors that wanted to do stuff. And you know, even in those days, we said, well, geez, you know, we've got to work out a way how our clients, and I mean, we were in consulting even in those days, how our clients can represent themselves to investors. And we came up, Mick, with this formula. And I wonder if you can just move to this slide, if you can. Okay, guys.
Andre.
Can you see? Can you
Yes.
see the?
Yeah.
Okay. So, guys, we came up with this crazy formula called Mover. All right, and really just to be able to describe, you know, those sort of key, those really important things of how we engineer value into the organization. And so, if you think, well, what does this Mover stand for? Well, Mover really has, you know, just these key elements, hey, Mick, of, you know, management plus opportunity. So the combination of management plus opportunity is equal to value. You know, Mick, now, you know, there is some, I know this is really sort of simple, but, you know, Mick, if you think about it, when somebody buys something or when somebody determines value, at least with regards to a business, you know, those two sort of very broad components, right, are so critical. So we call this the seller perspective, right? So management plus opportunity is equal to value. What is the seller offering the buyer? And what is the quality of what that seller is offering the buyer, right? And, you know, so if you think about it, the higher the management capability, okay, and the opportunity is, you know, the more investor ready I am. So
can I jump in there, Andre?
Please.
You know, because I mean, before you showed me this formula, you know, my natural instinct was, hey, if I'm going to buy a business, I want to know that business is in a buoyant market, that they have lots of you know, opportunities ahead of them, and you know, that's going to be really powerful. But of course, if all of that revolves around, you know, one owner, one manager, and that person leaves when they sell the business, you don't actually have a sustainable opportunity. So that management element you really brought into great relief for me.
Right, and the nice part about this is you can expand that concept as much as you want. You know, management is also about your bench strength. For example, if you have salespeople and, you know, hey, you don't have any, you know, 80% of your sales is coming from a very small minority of salespeople, that makes your business very vulnerable, right? So it's always that concentration issue. That's part of management, because right. So you can really look at management from a whole range of perspectives. and then of course opportunity is something that is, in my opinion at least, completely different. And opportunity is, there's engineered opportunity. So in other words, how do we drive a predictable revenue business? So that's a very, very important part of opportunity, because what you're doing is it's delivering opportunity with less risk.
Right.
So at the end of the day, that M&O is all about, first of all, it's greed and risk. You know what I mean? It's the ability for a buyer to, or at least to present to a buyer that whatever they're buying, they're going to get what they think they're going to get. And
any buyer is going to be looking at the long term cash flow that's going to come from that. So when you've got that predictable revenue generation, they know, if I buy this business, that predictability is going to happen for the next few years, which makes the investment that much more attractive, and therefore the price at which they're prepared to pay for it much higher.
Yeah. So what we try and do with just from a philosophical perspective is how do we always get better? How does the MOV always, how does that always improving? And having the right focus around, just those two key elements. The driver is the M and the O, right? Values is the outcome of M and O.
Right.
And the more we really think about our business in that perspective, and I think for our employees as such, that is aspiration. And it's, and then the issue of, oh, well, maybe we'll sell one day. Well, everything's for sale. Get over it. But if we're part of something that makes it really good, then that's a good thing.
And Andre, could I underline one point? I think you've already emphasized this, but I really want to double down on it, in that, having an investor-ready mindset doesn't mean you're going to sell your business. What it means is you're going to run it in a way that if somebody, can you see my door? No, you can't see my door. If somebody walked in through the door right now and offered you a price for your business, it would be the maximum price, because it's well run, well led, right? It's got great opportunity ahead of it. So if you just practice being investor ready, what it means is that business will always be great. It will always be providing opportunities for employees. It will always be delivering a good return on capital employed for the ownership team. It'll always be well run. So it's just a philosophy. We're not saying it means you're going to sell. No, it just means you're ready at any time, and the business is the best it can be at any moment in time.
Love it. And the big thing is, Mick, what I always like to tell owners, right, is that M and O. You take yourself out. What does M look like? Take yourself away. Just remove yourself completely. What does M look like?
I like that.
What does M look like, and what does O look like? And or in the larger businesses, what is, specifically, what does M&O look like if you take yourself and maybe two key people out of the business? And then all of a sudden you start seeing the decrement of value automatically. You don't even need a damn piece of paper for that. It really is. You can just put that in your mind. And really, at the end of the day, you want to know about the vulnerability of your business. There it is. So yeah, okay. So let's finish off the formula, and then we can, pontificate. Another beautiful word that I created. So the right. So
that's 4 syllables. That's good for you, Andre.
Oh, if you had asked me how to spell that, I swear to goodness, I think I'd fall over. You know what I mean? So, here's the thing, Mick. If you think about it, so we got to the V. Now, we call the MOV the seller's perspective. In other words, what is the seller delivering to the buyer? Then there's the buyer's perspective, which is the E and the R. All right. So the buyer says then on the buyer side of the world, it says, okay, now how would I take this business? And what would be my exit strategy? Now, when we talk about exit strategy, remember, it was just more, to create that mover thing. The E is more about, okay, how does this fit into what I'm wanting to do with the business? Right. So a lot of times the exit strategy is all about, if there are synergistic things that, for example, we talk about a strategic buyer, I can put, one thing plus one, and I can make 3 out of it. So the buyer has certain what we call value drivers that help them identify the way that your business becomes valuable. So now, why is this important? So let's think about this for a second. Is that I'm saying, if ever we were to sell a business, and that is our objective, if we were to sell our business and that was our objective, understand who your potential buyer could be. Because if you do understand that, you will sometimes see how they would, how you position your business that is most valuable to them. So that is just something to think about. And then at the end of the day, of course, value plus their strategy, let's call it, is equal to their return on their investment. So that is essentially the way we look at the mover formula. So nice little way of thinking about being an investor-ready business, Mick. And I think there's sort of another show that we can have on is some of the. We've got a little some scorecards and little things for people to think about. In terms of, are they investor ready? And I know there won't be enough time for this session, but if we can maybe just introduce some of those concepts.
Yeah. So this was something that we created. We call it the Investor Ready Scorecard, and what we, in working with organizations, we identified a number of attributes. There are 9 that we have here on the scorecard, and we'll go through what those 9 attributes are. And then going across this chart, you can see that there are we've described 4 business conditions or 4 patterns that we see in organizations. Some businesses are just trying to keep their head above water. They're in survival mode. Now, once they start getting their cadence, and they start building things, and they start getting a little bit more control, then they're in business. It's a little bit more predictable. And then they start thinking about scaling their business. They start to have a mindset around growth. They've mastered some basic things. Now they're growing till ultimately they start thinking about, how do I create long-term value? How do I create an asset that is perennially going to give me a good return? And, across the top there, you can score yourself from, 1 to 12 across that. So a little scorecard you can use, have a little bit of fun with it. But in terms of some of the attributes that we think are important, there are 9 on here. Andre, some of those, I know you have. Which ones do you want to bring into relief on our call today? We'll talk a little bit about each of them, but
I think, Mick, would be pretty cool, is people want to, if people feel that this is something that they want to sort of just get a little bit involved in, maybe they can they access this somewhere? Is there?
Yeah. What I'm gonna do here is so I didn't actually create a specific download for this. So here's how we're going to do this. If you go to our website, go to flooringbythenumbers.com, right, and click the benchmark, and just sign up for the benchmark report. It's a commercial flooring benchmark report, has immense value to it, and that'll drop you into getting some information from us. And what I'll do is I'll email out to that list this investor ready scorecard. So that's
good. Okay, nice.
Yeah.
So
go to our website, flooringbythenumbers.com, click benchmark. You'll see a little form there to put your name and email in there, and you'll immediately get the benchmark report. And then it'll allow me to send you an email with this, investor ready scorecard. Okay.
Sounds like a very scalable system, that, Mick.
There you go.
I mean, hey. That's called manual back office.
All right.
I mean, which would be really lovely, because if there are a few people that really want to, and what a great, guys, here's the thing. If for those of you who may want to just take this little scorecard, right? And do me one favor. Take that piece of paper and hand that out to your top people, and ask each one of them to score independently. So not as some kind of damn group thinks, kumbaya gig. All right, we're not in that. All right, okay. So we want each individual to be as candid as they can as to how they see their business, how they see the business, right?
Right.
And Mick, then to take all that together, and you do that as the owner yourself, right? And then see whether there is a strong degree of alignment between everybody. I mean, already that on its own, I think, has value, and then so from there, of course, to try and get people's different perspectives, where they see on the continuum, because essentially, guys, what this really represents is the life cycle. You know what I mean? And what we've noticed is there's businesses that have been around for a long time, and they're still in survival / business.
Well, Andre, let me see if I can zoom in a little bit. Zoom in. Okay, I want to.
Okay, look at that. Look at that. Very
nice. So this one has become very apparent through the last 12 months, right? This attribute of customer portfolio. So the question we're asking, for an investor-ready business, if you only had one customer and all your revenue came from one customer, that would be very risky. Somebody coming in and giving you a good valuation on your business based on that level of risk, it wouldn't happen. So that's how we think about it. But when we say survival, we're saying survival mode, and a lot of you will say that, hey, I've been in business 30 years, I'm third generation, we're not in survival mode. But what we've seen, we know several of our organizations in the commercial flooring space where for 15, 16, 20, 25 years, they've gotten most of their revenues every year from a couple of clients. They've built that reputation over decades, and it's like clockwork, and then they add to that. But what we saw in the COVID era is everybody's business shrank. And so, you've still got those two key anchor customers, but they're producing much, much less revenue. Now you've got this big cost base with a very much shrunken revenue, and so people are going, "Oh man, I need to go find new business." And the second one is customer acquisition. I don't quite know. I haven't had to do it for 20 years, so we're a little bit rusty. So some people, can be around here. So when you've got your customer portfolio, right? If you lose one customer in this scenario, it does create the business risk, but we're not going to go out of business. When we're in a growth mindset, we recognize customers come and go and they have life cycles. And so we plan around that. And then when we've got a real sustainable business, no customer represents more than about 10% of our revenue. So if one customer goes down, we're in good shape. And the first one, customer portfolio and customer acquisition, one of the things that I've seen is, a lot of companies coming to us saying, how do we go get new business? Something that, we do with our clients significantly. And it's a skill that it's a muscle, it's a capability, it's an attribute of your business that really needs to be robust and scalable. So, those two things leapt out at me, Andre, because that's something that's really quite topical right now.
Right. Yeah. So I think look, there's just so much into this. I mean, because this is more, how can I say, it's more of a guideline. Okay. And remember, we could have 2 customers that have been with us for, and we just continuously growing by dealing with more project managers within the customer. So, one of the things that I just always love to use this as more of a genesis for thinking, because then, a great thing to ask people, when you scored this, how did you define customer in your head? Was customer Whiting Turner? Was it DPR? Was it, or is it the people that buy from us? And we have spoken a little bit more about that, but to me, this is what really helps us with our thinking in terms of are we in, in which phase of the mindset are we in? Mick, we got people that are sophisticated today, right? Lots of people that are sophisticated, and they do so little around the way that they manage their customer portfolio. When I say hell, I don't even know what it looks like.
Right.
So forget about managing. You know what I mean? So it's just because they're busy and they don't look at their portfolio as being strategic, as opposed to they know who their top customers are. Absolutely, they've got that. But how they see this, in terms of their growth, in terms of the way that they develop these, it's very, very weak in most cases. So we like to take each one of these elements and dive real deep from a strategic perspective.
Right.
Yeah. So I think for the beginning, Mick, let people just
let's just describe each one. So we've said something about customer portfolio, customer acquisition. Money making machine is our parlance, right? So we're flooring by the numbers, and we believe that the ultimate scorecard in any business is the financial statements, right? And so you've got the income statement, the balance sheet, and the statement of cash flows. The income statement is your money making machine, so your ability to generate profit. Most people understand the income statement, the money making machine. That's what we're talking about. That's what we're talking about here. Do you want to add any color commentary on that one, Andre?
Right, and I think once again, Mick, people do understand the income statement. What they don't do is they don't use that as a management tool in a management system. So the understanding is one thing, but it's not part of how they create an investor ready mindset. Both the money making machine, the cash management system, these are core competencies, and how effective we are around these things really will help us determine whether we are moving towards an investor ready state or not. I think these are 2 very critical pieces. I mean, we've got 3 elements of the whatever it is. What's it, 9, 10 that we have, but 3 elements of that are financially driven. And of course, that's important for our own growth, because without the right cash, without the right profitability, without the right capital structure, we can't grow, no matter how good we are.
Right.
Important elements.
Just show you. I just bring the rest in so that we can read that and see that. Management bench. When we talk about bench, we mean, do you actually have that broad capability? Do you have leaders in your business? Do you have a distributed, management system, or is it the owner makes all of the decisions? And you'll see across that continuum as how that management capability is spread. So the more of that you've got, the more distributed your leadership is, the more robust your business is. It's a really, really important element as you scale your business.
Right, and then of course at the end of the day, management bench to me is two things. It's not only depth, it's width and depth, right? So the depth being the real capability, right? Okay, and the width being how we can leverage, right? So be it sales, that we've got some really capable guys, but we also got we've got a little bit of I love the word bench. It's like, it reminds me of like the baseball and all those good things, and that we got some really good talent that's coming up. It's not there yet, but it's coming up, and how we plan and manage that, I think is really instrumental in first of all two things, in getting opportunity, right? And secondly, reducing risk.
Right. What about management operating system? What do we mean by that, Andre?
All right, Mick, to me, okay, and I really, if it was truly up to me, and I know you're the boss, so you're the guy that determines, it's really how we run our business. Those are my words for management operating system. It's the culture about how we run our business. It's the way we have meetings. It's how we create value out of our meeting. I mean, meetings are really important, but many times, it becomes just a circular waste of time. Okay, so but
hey, Andre, I heard a great quote about meetings.
Yeah,
somebody said meetings are where minutes are kept and hours are wasted.
Well, that's being very harsh, because
but you know the difference between a great meeting and a frustrating meeting, right? You know the attributes of that, and all that you need to do is, because meetings are part of that management fabric and how you communicate and make decisions, you want them to be as effective as possible. And you know how to do that. You have a clear agenda. You have a prescribed amount of time. You do your preparation. You have your actions and you follow up, and you have a good cadence around that. There's no rocket science to it, but it does require a little bit of discipline. It's so easy thinking, I don't need to think about this meeting I'm going to, and just showing up. And then it's not going to be as good as you would want it to be. So it's one of those daily habits that we need to be thinking ahead of time, and to how can I make this meeting effective for everybody that comes in. You know all that.
No, I think people know it, Mick.
Right.
But they don't do it.
Yeah, that's why I say it's got to be a better habit.
I mean, so for my purposes, they don't bloody know it. You know what I mean? So it's one of these things that they don't value the time that's in that meeting. And specifically, and I'm saying this is specifically an owner-driven thing. Many owners don't, for those that are meeting fanatics, I mean, they just don't value the time that people have in this. So I think, anyway, but that's part of the management operating is how we meet. But part of it is also our performance management system. What are the metrics that we're using? How do we use these metrics? Do we use these metrics as just, done, next? Or do we use these metrics as ways of helping us, guide, future performance? And then also philosophically, does our management operating system, is it looking at the forward-looking stuff more importantly than all the crap that was at the back end? You know what I mean? So we often spend in our management operating system, or the way we run our business, with all the stuff that is historical, that sometimes we can't do a hell of a lot about it, right? And we spend very little time on the stuff that really we can do something about.
Right.
So that, if there was one thing that tells me about a business that is truly thinking about being in an investor-ready state, we're talking about those things that are what we can do about looking forward.
Yeah.
Right. And once again, that's hard. It's like thinking. The looking forward stuff is always the hard stuff. That's why there's so little, there's so little focus around pipeline and the quality of our pipeline and how pipeline drives our backlog. If you think about it, that is the most forward-looking thing, and we should have 5,010 metrics and 5,010 words around pipeline. And we'll have a good business. But anyway, all right. So sorry, I apologize.
See, that's why I teed that one up for you, because I know that you're passionate about that and steering the business. And as you say, we're flooring by the numbers. We believe absolutely in the passion of people within the business to be able to make intuitive decisions. But we want to provide some numbers to give us some evidence so that we can take that talent and use it appropriately.
Go. Sorry, Matt. The thing about numbers is it doesn't mean that, but I think this applies to both also standard procedures. Hey guys, we love entrepreneurialism. We love people to take opportunity, identify it, convert it, make money out of it. We love that. I mean, we're involved in a lot of businesses that today, they're flooring. They are in. You'd swear that these guys are in a high tech business with just so much opportunity they don't even know where to go next, and that is so beautiful to see. So we want opportunity. We want the capitalization on opportunity. That's why Mick and I sometimes use the power of intuition. Combined with evidence. So we want to have that sort of. I think I screwed that up, didn't I, Mick?
You did it in a beautiful way, though.
Can you repeat that for us?
This
is one of Mick's things. I said,
no, this was your phrase. It's not my phrase. The passion for intuition, powered by evidence.
All right, there you are.
Was that it?
Yeah, can you believe it that I can even screw that up? Okay,
we have to wordsmith it. Standard procedures. I mean, standard procedures sounds very dry, but here's the thing. I see this a lot with salespeople. You go into an organization, and you've got a couple of superstar salespeople, and you've got some new people who are trying to learn their craft, and yet the people that have been building their craft for 10 years. They follow certain steps. Now, they've never written those steps down. They're in their head and they do it, intuitively. What we've got to be able to do is to extract that, map it so that we can bring new people on. And also different people will have different, steps that they use that are really, really valuable. So tapping into the standard, methods and being able to map it allows us then to scale our business. You can't scale. So to go, in the olden days when we had these cottage industries, the craftsperson, was doing everything individually. But to get to mass production and build the Model T, what you needed was standard processes that could be repeated. And so that's all we're doing with our business. We're starting to get a little bit more discipline, repeatability, and great flow. So having standard procedures means that you're not reinventing the wheel every time or every week. If you're firefighting the same problems week in, week out, there's something wrong with the adherence to your basic standard work practices.
Right, Mick. Lastly, I think everybody's getting, I know, guys, it's we try to make this as crisp as possible. Winning formula, which is
we don't do crisp, Andre.
I don't want to, but really, I mean, this is where Mick is very, guys. He can't do many things right, but man, he can do this right. He is really good at this. So
yeah, so
it's a little.
Yeah, so the winning formula really is about your positioning and your value proposition, right? Big fancy terms, but how do you win? How do you get your prospects to work with you? What's your differentiator? How are you going to go to market? So I need to be able to have some some words. Now, if you have no value proposition, if you can't differentiate what you as a flooring company does versus, Acme Co down the road, the only thing that you can do is this first box is you've got to compete purely on price. And then you get, I hear from salespeople, oh, they buy from us because we've got a good relationship. That's good, but ultimately, what is defendable and repeatable is that we have a very clear, distinctive offer that we're repeating, we're building on, we build our brand on, and then ultimately, if your winning formula is so crisply articulated and so compelling, it means you're going to magnetically attract the customers that you really want, the highly profitable customers that pay on time. That's what we really want. So your value proposition and your positioning, determines what kind of stuff that you put into your funnel, into your pipeline, and into your backlog, and ultimately translates into your business performance. Very, very big thing. One of my pet subjects. We could talk about that at great length. So there we are.
And I really, Mick, and I just want to say this about, to me, this is one area, that number 9 is the one area, of all of those things, that is most probably the one area that people really, really struggle with, and they struggle with it at the corporate level. They struggle with it at the individual salesperson level. Hell, I think the investment in that area is so substantial. If there's one thing we've got big clients that are having difficulty with that.
Right.
So yeah. Anyway,
okay.
All right, I think we're good.
So yeah, you can get this. Go to flooringbythenumbers.com, click benchmark, sign up for the benchmark report, and then I'll send you after that this. Or alternatively, if you want to just ping Andre and I on LinkedIn, we can send it to you directly that way. So
hey, not me, please, not me.
What? You don't want to do any work?
I'm sure I'll mess it up completely.
All right. Okay. Well, look, thanks for being with us again this week. We've had fun. You may not have, but we did.
There you are. There is a value proposition. Hey, as long as we have fun, who cares?
Hey, if we're not having fun with it, we love our business. What we do, we can really help you
hell yeah.
fun at the same time. So we
love what we do.
Hey, any feedback, comments, send it to us on LinkedIn, or let us know what topics you want to cover. And, we'll look forward to seeing you next week, same time.
Thanks so much, everybody.
All right.
Enjoy. Hey, cheers.
Bye-bye.
Bye.